Good afternoon, ladies and gents, and welcome to today's webinar hosted by myself, Andrew Walker from the SA Property Investors Network in conjunction with TUHF. Now, ladies and gents, let's see who's with us today. We've got quite a few people joining us. Who is with us today? Gugu, good to see you. Jill, Catherine, Ken, fantastic. Can you all do me a favor? Can you let me all know right now, where are you in the country? Are you in Joburg? Are you in Durban? Let us know where you are right now. As you'll see, I'm sure most of you know how to use Zoom. There is a chat box over there and a Q&A box. So in the chat box, if you can all just say hi, let us know where you are in the country. Let us know if you are a client of TUHF's. Have you been working with TUHF? Let us know where you are. Now, ladies and gents, we have got awesome experts with us today. This is your opportunity to find out what is happening in the economy, what is happening in property today. And if you have any questions, please look out for the Q&A box, which is right there. Any specific questions for our experts, which of course I will be introducing in a moment. So let me get my panel box back up. Fantastic. I can see there's still a few people joining, which is fantastic. Let's just give them a few seconds. Make sure you've all got a cup of coffee. Make sure you got a cup of coffee and please, everyone, get a pen and take loads of notes. Taboho is saying he's from Joburg. Brilliant. Mira, I am from sunny, warm Durban. It's even sunnier here in Joburg. You see, ladies and gents, my name is Andrew Walker, and I'm going to be the host for the next 1 hour. And I am from the most beautiful city in South Africa, which I'm sure you all agree with me is Johannesburg. If you agree with me, give me a thumbs up, ladies and gents. Okay, we got Serena from Durban, from the TUHF office. Fantastic. Thank you for all your attendance. Okay, that's Sam. We got Sam from Mpumalanga. Brilliant. And remember, if you are a client of TUHF, please put that in the chat box for me. If you are a client of TUHF, let us know. Okay. So, welcome David, welcome Deirdre, welcome Gugu, Jill, Ken. Awesome. So we have people from all around the country. And today's all going to be about, ladies and gents, is, you know, we are in level 2, we are in COVID, coming out of COVID, and there's been so many changes to the South African property, to the South African property market. You know, the way we're going to be doing properties moving forwards, is it going to be how we have been doing property? You know, should we be entering into the property market right now, or should we be on the sideline? These are all the questions I want to be asking all of our experts. Okay, so let's just see what we've got here. Let's see who we've got here, ladies and gents. Okay, so I think it's time for me now to introduce the panel. So Lusanda, are you out there? Lusanda from TUHF. Let's get Lusanda on the line very quickly.
Yes, hi Andrew, I'm here. Morning, morning everyone.
Fantastic. Lusanda, could you do me a favor and just introduce who you are, where you're from, and what do you do at TUHF?
Well, I'm Lusanda Netshitendzhe. I am the Development Impact Executive at TUHF. I've been with TUHF for over 13 years now. So I'm really responsible for all the services that support clients to grow their portfolios in a responsible and organic way. So we provide all the training and mentorship support. We provide the sort of sub-products like Chitsulo Equity Fund that helps clients who don't have the necessary deposit to access finance from TUHF. We also have an exciting product in townships called Umastandi, and we finance entrepreneurs. So that's what we do in my unit.
Okay, fantastic. Thank you so much, Lusanda. Okay, let's now go to Professor Francois Viruly. If you could please introduce yourself, where are you from and what do you do?
Hi, Andrew. It's Francois Viruly here. I'm from the other most beautiful city in South Africa, namely Cape Town. But we can have a whole webinar about that.
Of course we can.
It's delightful to be here, and I'm a property economist. I've been doing this for 20, 30 years. I've seen property cycles go up and down, so that's something we can have a chat about a little later.
Yes.
I'm also an associate professor at the University of Cape Town, where I run the MSc programs in property. And I am the director of the Urban Real Estate Research Unit at the University of Cape Town as well. and been involved with TUHF for a number of years, and we'll talk running a great entrepreneurship program. Really, it's one of these programs I love. I run a lot of programs at universities, but I must say, if there's one that really gets me going, it's property entrepreneurship. And I think that's what it's all going to be all about for the next 45 minutes.
Yes, absolutely. Francois, you've got loads of experience in the property market. And that's what I'm saying, ladies and gentlemen, to get guys like Francois, Lusanda, and Henry on a call like this is invaluable. Please look out for the Q&A box. If you have any questions about the South African property market, be it residential, commercial, what's going to happen to the property market, now is your time to ask that question. Now, don't use the chat box, use the Q&A box. Okay, that brings me on to Mr. Henry Chitsulo. How are you, sir?
I'm fine. Andrew, it's good
Brilliant.
to be here, and I've been waiting.
And if you could just do the same for me, eh?
Andrew, I come from investment banking background. I used to be a property finance director with Standard Corporate and Merchant Bank. Spent some time with Absa Capital on the financing side. And I've been involved with TUHF for the past 5 years with the program of property entrepreneurship. And I'm also involved with the mentorship and the coaching program for property entrepreneurs, which really excites me. And I always enjoy each time when I meet property entrepreneurs and I see the ideas and all the things that they want to do. And I'm just here to help them navigate some of those challenges.
100%. Thank you so much, Henry. And that then leaves me with Leo. Leo, are you out there? Now, Leo is actually a student of the TUHF program. Now, some of you may or may not have heard of the TUHF program. I'm sure you just heard Henry talk about coaching and mentoring. That is something which we'll touch on a little bit later on, because there's been about 185 students go through the TUHF program, which is so exciting. Because remember, ladies and gents, TUHF is all about empowering property entrepreneurs. How do we take a property entrepreneur and enable finance and enable them to go out there and create wealth through property? Now that's exactly what Leo has been doing. So Leo, are you out there?
Yes, Andrew. Thank you very much. Oh, yes, indeed. I am. My name is Leo. I'm one of the property entrepreneurs based in the east side of Johannesburg, arguably one of the fastest growing property markets in Johannesburg. Yes, as you've alluded, I'm one of the entrepreneurs that were in the TUHF program, the TUHF program for property entrepreneurs.
Brilliant.
And I've been exploring through this, and I'm amongst the 10 entrepreneurs that were in the non-TUHF clients in Johannesburg.
Fantastic. Thank you, Leo. And Leo, if it's okay with you, a little bit later on, I just want to ask you about your experience and where you are, because yes, Francois and Henry, you've been in the property market for some time, 20, 25 years, but Leo over here has only been in the property market for the last, what is it, Leo, year or two?
Well, it's now been, this is my third year.
Third year?
Third year in the property market. And
so you're still a baby in the market, eh?
Very, very newbie.
Okay, brilliant. So here's the thing, ladies and gents, I've got so many questions for Francois, for Henry, for Lusanda, and I want to encourage you to ask questions as well. I can already see that some of the questions are coming through in the Q&A box. So we will be talking about them, but I think let's get straight into what is happening right now here in South Africa. And then later on, we'll talk about the Tppe program. Okay, so Francois, the first questions for you. A lot of people have been asking me, I'm a residential property investor, Francois, and I've been investing for 15 years, both in England, here in South Africa. And just like you, I've seen markets go up and down. And, you know, people are saying, but the recession we're going through now, we can't compare it to other recessions. Should people be investing? Is now the time to invest in property, or should we be on the sideline? What's your opinion? And maybe talk to us about your experience over the last 20, 25 years.
Andrew, I think that's a very interesting question that you're posing. And I suppose that when we look at the property market, the first thing we have to accept is there are cycles, you know, and of course, COVID-19 pushed us and we're going to get GDP numbers coming out today or this week actually, and it won't look rosy. But as you rightly said, I've seen this before. We always forget that we were at a stage where interest rates were 25.5% in the 90s. We've seen the global financial crisis. So yes, the other thing is the balance sheet of people are looking weak at the moment. It's not easy, but the thing with the property market is always to remember the segments of the property market. And what we tend to forget is that about 70% of all the properties registered on the deeds registry are probably 800,000 rands and below. That is the South African property market. And that component of the property market is actually doing relatively well. For example, in 2019, when the whole market was rising by 3.5%, that segment of the market was showing returns, capital growth returns, of between 11 and 12%. So what I am saying is, before you look at the headlines, which often purport to the top end of the market, yes, if you're on the Atlantic seaboard at the moment, prices have just about halved for certain properties. But I think don't extrapolate that for the rest of the market. We'll talk about opportunities, but I think that there are two things that are actually interesting at the moment. First, we're going to see stock coming onto the market, whether it's apartment blocks, whether investors taking a different view, institutional investors hitting a bit their loan to values at the moment and saying maybe there's some properties that we want to get out of. And I think that that will play an important role in the market. My second point is that over the next few years, the name of the game in the property market is going to be the residential property market. I don't think it's going to be the office market. Maybe your logistics sector, which benefits from e-retailing a bit. Retailing has its problems, but if you go into the residential sector, and I've seen this over and over again, even when economies do badly, your residential property market keeps on going because of the demand for space. People have to live somewhere. And where it could be interesting, if we look at the segment of the market that we are largely talking about, there's some people who need to come down one or two notches, who are suddenly finding themselves in this sector of the market and rental where maybe they would have. And then finally, and then I'm going to stop. Andrew, please forgive me, being a professor.
No, absolutely.
I'm used to double periods, so I think.
And you're used to your 45-minute slots.
Finally,
I've got a question.
Bear in mind.
I've got a question for you. When you say residential market, one thing I learned early days, Francois, was someone once said to me, a property coach, said, always invest in real estate that the average person can always afford to buy and rent. So when you say residential, are you talking about properties, under 1.5 million, your standard buy-to-let type of property?
Absolutely. And I think it comes back to the point that I was making. Get your segments right. If you're at that lower, I can tell you now, if you can put stuff out at 450,000, 500 up to 800,000, I think that there is demand there. That space becomes very interesting. The moment you go in the upper end of the market, I think we've got a very different game playing itself out. And then absolutely. And then finally, we will talk about one or two things that we need.
Yes, exactly. I'll come back to that. Henry, I've got a question for you now. So, I was talking to Pam Golding a week ago, actually, about July. And Pam Golding did 1.8 billion rands worth of property, right? Which is, and Remax 3.3 billion. And, I thought, well, when we're in COVID, coming out of COVID, I didn't expect there to be record sales in property. Now, yes, it could be because of what we call the pent-up demand over COVID, and interest rates have dropped, Henry. Could you give us your insight as to maybe some history with the prime rates here in South Africa, and what's your view on interest rates at 7%? Surely they'll go up again. And then Nico will just share that graph for us as well. Just unmute yourself there, Henry. So just unmute yourself, yeah. Okay, there we go.
And every crisis has both dangers and opportunities. And
Yep.
I think if you look at the opportunities that have been brought is the interest rate. On one hand, we've got COVID, and on the other hand, we've got low interest rate. I can't recall when prime overdraft rate was 7%. The graph here, I think the last time when prime was at 7%, it was around 1965. So those who are younger for longer, like Francois and some of you might actually recall that. But what is interesting is that if you look at the lowest that prime has been was in 1949. And I don't think that a number of us were present. And that time, prime overdraft rate was 4.9%. And the highest prime interest rate was in 1998, when it was 25.5%. But Andrew, what was interesting is that despite the fact that prime was at 25.5%, people are doing deals. You've got the John McCormacks who were doing deals at those rates. And right now we are sitting at 7% prime. And I think we are going to see prime at these levels for the next 2 years. And that gives entrepreneurs the opportunity. Because if you had 10 million rand funding that you got from TUHF for your property in town, if the interest rate since the beginning of the year has actually dropped by 275 basis points, in other words, by 2.75%. And since COVID started, it has dropped by 2.5%. So if you had a bond of 10 million, and that drop actually translates to the 250 basis points, translate to 250,000, which is about 20,800 a month. So although on one hand we've got crisis, there's also opportunity. And as entrepreneurs, what you want to do is to harness some of those opportunities. Look at those opportunities. And just talking about why should we be investing in property, Andrew, we know that we invest in property because property is a long-term investment. And we invest for both capital and for the income growth.
Sure.
But more importantly, we are able to leverage when it comes to property. We're able to gear. That's why we've got the likes of TUHF. We have been financing property entrepreneurs that have been investing in the inner city. And we know that small landlords are the most precious part of the state. And they've been doing very well, these property entrepreneurs.
Sure, and Henry, tell me, if you were mentoring someone, because I know you're a mentor as well, and you've been helping a lot of property entrepreneurs come through the TUHF program. And in fact, there's a question about there now, which I'll address. Would you recommend that people run their numbers not on the 7%, because of course, it is 7%, and as you said, it has to go up, right? The question is, when will it go up? Should investors be running their numbers on 10% or 12%? Because what happens if, I'll go buy 500,000 Rand, buy to that property, the rent covers the expenses, plus puts a bit of profit in my pocket. And the next thing, Francois says to me, hey, interest rates are going up to 8%, 9%, 10%. That could very quickly put me into a negative situation. What's your advice there?
So what you need to do is you need to run what is called a sensitivity analysis.
Okay.
A sensitivity analysis, you look at what is your best case, and you look at your worst case. And what you want is try to make this deal work at the worst case, so that if there are any surprises, you are not underwater. So although we are sitting at 7% interest rate, we also have other factors. I mean, we've seen what is happening with electricity. We've seen what's happening with the municipalities, with utilities. So you need to factor all those other things. So you need to run a sensitivity analysis and try to work the worst case scenario.
100%. Thank you so much, Henry. Lusanda, I'm going to be coming to you in a minute. And Lusanda, I want to be asking you around, you are working with TUHF and you talking, dealing with the clients on the ground. I'm going to be asking you more about what are your clients asking for? What are you seeing, Lusanda, at TUHF? But just before I do go there, I can see there's loads of questions. Remember, ladies and gents, the Q&A box, if you have any specific questions, and I can see the questions starting to come in, which is brilliant. There's a comment here from Sakome. Shocha says, I, Sakoma from Mamelodi, I'm interested in becoming a property entrepreneur. Basically, how do I go around that? Sakoma, what we will be doing a little bit later on is we will be talking about the Tppe program, where people like Leo have come through. We're going to ask Leo about his experience. Put it this way, how can the average person become a property entrepreneur? There is a specific program that TUHF does have, but we'll talk about that a little bit later on. Lusanda, I want to come to you now, and I want to ask you, at TUHF, dealing with your existing clients, what are people asking for? What are people saying? What are you seeing that's actually happening on the streets?
Andrew, thanks. I mean, in terms of the impact of COVID and the lockdown, particularly the hard lockdown, we were not necessarily immune to its negative impact. Our clients experienced it. Obviously, they are providing accommodation to tenants who work in different sectors. Part of the benefit with our market is that we sort of focus in inner cities that are multi-sector economies, and tenants work in different environments. Banks, they work for government, they work for the services market, like restaurants and that. And you see that there's been an impact that has been, different clients experienced it differently, but there certainly has been lower collections during that time. But as the risk-adjusted lockdown restrictions were being implemented by government, we started seeing the improvements coming with that. So from level 3, for instance, as more people started going back to work, you could see that the effect of a multi-sector economy was starting to translate to better collections because more people were able to go back to work. But certainly people who still worked in environments that had to close down and had lost jobs were affected, and the tenants were not able to pay. Therefore, the landlords experienced that impact. But we're seeing that the recovery is quick. But what we're starting to note now in level 2, I think somebody made the point earlier, is that there are opportunities that are starting to present themselves in the market because of lower interest rates that are out there, and some maybe larger property holders wanting to offload properties maybe that are no longer relevant in their portfolios, and people are coming saying, I'm needing finance for an opportunity that I've seen that's coming at below market value. So there is opportunities that are starting to open up. Our view is that, we need to move cautiously. Obviously, we would take on those opportunities as they come. But I think the point that Henry makes around sensitivity analysis or stress testing any investment you take forward. I mean, TUHF has always been conservative in the way we analyze your rentals that you are projecting, the operating costs that you are projecting, vacancy levels, and sort of the provisions like bad debt. We are now saying you need to stress test that even more, because the market has fundamentally changed. What we expect to see also is that as we move forward, we would start seeing more clients bringing different designs, because what COVID has told us is that there's now need to work from home and do so comfortably. So, would we now start seeing designs in the inner city that provide for some private workspace for a parent who has small children in a 20 square meter flat? I don't know what that would look like. Perhaps, and this is the benefit of working with different entrepreneurs, small scale landlords, that they bring in that competition and can come up with these thoughts around how to diversify that risk of having to work from home and provide designs that are resilient in the long term. So I suspect that is something that will come. It's not yet there in the economy because we haven't quite tested it, but I suspect that it's something on the way. The point around utilities that Henry makes, it's a serious one. Obviously, as people have to spend more time at home, the impact of those rising electricity, water, and rates and taxes from the municipalities, most of these landlords have felt them. And this is something that needs to be addressed quite urgently, I think, by government to sustain affordable rental housing in this country.
Exactly. Now, Lusanda, I do have another question for you, which I'll ask you in a second. And then, Francois, we'll be coming to you because I had a chat to you yesterday, Francois, and you're talking about, COVID's giving us a sneak preview of the future. And, do you think or feel that the way we transact or the way we do business or the thinking around the property market is going to be different? So I will be coming to you in a minute, Francois. Lusanda, back to you. I've got quite a few questions here around townships or Mustandi. So the question here is TUHF funding townships, basically almost Mustandi, and is there any talk about you spreading that to other townships around Gauteng? Maybe touch on that.
Yes, we've been having a lot of requests to spread to townships like Atteridgeville and Mamelodi in Pretoria specifically. There have been inquiries, I know, as well around Garankuwa. It's something that we're looking into. We are not yet there. Mustandi is fairly new, but what we've started noticing also with the impact of COVID is that it looked like the units that we have in townships were more resilient in terms of levels of vacancy and ability to collect, simply because, you have resident landlords who are hands-on and they understand the sort of dynamic in those environments. So we saw that Mustandi bounced back quite quickly, and in fact was able to still kind of navigate that storm better than we've seen with some of our assets in the inner city. So, there certainly is demand for accommodation in townships. We are looking to expand into Guguletu, for instance, in Cape Town. There's a lot of demand for that. So we would announce through our platforms over time as we expand. But the long-term thinking is that TUHF currently has offices in all major metros. So we have an office in Durban, we have an office in PE, we have an office in Cape Town, obviously Johannesburg, and a satellite in Pretoria. The idea is that over time, Mustandi would have presence and representation in all those metros where the main TUHF business operates. So we would expand into townships in areas where we already have a presence. But that's not a decision that's on the table yet. For now, we fund in Soweto and Gauteng, we fund in Cape Town, in Khayelitsha and Mandalay, and that's where really we are focused for now.
Excellent. Thank you so much for that. So the questions for you, Francois, and Henry, I'd like you to, after Francois' answer, if you can also touch on this from your experience. So Francois, a question came through again about, should we be thinking differently about the real estate market in South Africa? And you're saying yesterday, this is giving us a sneak preview for, what's going to be coming all the ahead. So maybe talk more about that.
Look, Andrew, the point is this, that we've got some long-term trends in the property market. And yes, some of it was accelerated by COVID-19. But I think, yes, we faced a humanitarian disaster. And there's nothing positive of any of it. But I think if there's one thing it does, it starts, as you rightly said, a preview of the future. Maybe we'll go back to what we were doing, and that's possible. But I think we've got some long-term trends. And let me just raise some of those trends. First of all, I think we increasingly need to appreciate in the property market that property is not about selling square meters, GLA, however you want to call it, but it's about selling a service. And I think that more and more, if you go into a residential block, you will want, and I think Lusanda talked about that, homework and play. It's something we've been using for many years. And I think that's slightly changed. It's now homework and not maybe play, but wellness. People are becoming conscious of their wellness. And I think that becomes important in the property market. So I suppose the point I just want to make is that many property owning companies and investors probably have to start thinking more like hotel groups. Like if you were a hotel operator. And the point I always make when I go to a hotel for 2 nights, I don't think I'm renting 20 square meters for 2 nights. That's not. No. I'm buying into a service. And that's with the co-living. Now, the other point is that I think that we will walk out of the COVID-19 experience with the property market itself looking different. First of all, leases may well get even shorter than what we've been used to. Many of us, especially in the commercial, we're used to 10-year leases that jump to 5, 4, 3. You know what, at the moment, if you can get a lease, a short-term lease, you take it, which also means that escalations become slightly less important because you're back at the market continuously. So, and then, yes, it's the way we deal with operating costs and so forth. By the way, there are other opportunities. I think that neighborhood shopping centers, you've got a nice apartment block, ground floor, a bit of shopping, you walk in, you buy your goods, you get out. I think that that would become very attractive going forward. And for those of you who have retail space on the ground floor, yes, I think there are opportunities. So the point that I do want to make is the nice thing of a constraint, which I always say, is you either go around the constraint or you fight the constraint, or you use that constraint to come up with something new, something different. And I think we really have an opportunity here of taking what we have at the moment and saying, maybe this is our key to start thinking differently about things and not to find ourselves in this position again. And yes, how viruses operate in our world is not something we can control. But as Henry also said, we've got to do feasibility studies and we need to do our sensitivity. That has to do with risk. We can measure risk. What we can't measure is uncertainty. But I think we do need to see how do we create companies that are robust, maybe more robust. Yes, in the past, it was fine to go and borrow till the hilt, hit your loan to value as high as possible, go for it. But I think what we're learning now, and the property sector in general, is be a bit more cautious. There are uncertainties. Be careful how much you borrow. Do it in a responsible way that reflects that there's a bit of leeway in what
some equity.
Okay.
Absolutely. Now, Francois and Henry. So, Henry, I want to get your take on that as well. I'm going to read out a question, and then after your take there, Henry, either Francois or Henry, if you could answer this question for me. Good morning, all. I am a TUHF client. I would like to continue to purchase more flats or buildings in the CBD. What are the risks relating to the proposed changes of Section 25 of the Constitution to ownership of property in the CBD? So that's a question I would like to address. So, but Henry, first, if you could just give me your opinion on what should we as investors on the ground be thinking about? Do you think there's going to be some big changes in the next 12 to 24 months? And what's your take on that?
Andrew, things have changed and we need to move with the changes. And what is interesting is that especially when it comes to borrowing, yes, at this time, the interest rates are low, but we are not going to continue in this environment.
Yeah.
So it's important for one to undertake a feasibility study and ensure that the project is viable. And we often find that funders, like TUHF, they always insist that there has to be skin in the game.
Yeah.
There need to be some form of commitment. And I often meet a lot of entrepreneurs and they've got all these nice ideas and they'll say, when you say, so how much are you contributing as equity? And they'll tell you, I'm contributing nothing. Now, when things change, right, you find that a lot of those projects, they are going to be underwater. And also, when it comes to equity contribution, that's commitment. Is the person committed to this project? Are you going to be there? If you are going to get a call at 2 a.m., are you going to wake up and attend to your tenant who is complaining about the geyser? So these are some of the things that we need to look at. But more importantly, Andrew, is to understand the market, is to be able to do an analysis. What is happening with the sectors within the residential market? and which type of residential market should I be going into? And I often talk about a number of those investors that invest in Morningside, in Sandton, in Bryanston, in residential, where a number of your tenants, I mean, they drive the black Range Rovers and all those. And believe you me, you are not the first in line. West Bank, ABSA, Investec are the first in line. Whereas if you look at your other tenants who are renting in Joburg CBD, all what they are concerned is servicing their rental on a monthly basis. So you need to be able to analyze the type of market.
Absolutely, 100%. Now, just coming back to Henry, that question that I did ask, I'm just going to park that for a second about section 25, if that's okay. I will come back to it. Lusanda, I want to bring you back on for a few questions. I'm getting a lot of questions here, Lusanda, about I want to get involved in property. I want to get more education and mentorship. I did mention the Tppe program. Would you just mind very quickly for me, just introduce what it is and why it's important? And then I will also go to Francois and Henry and Leo, but just a quick introduction into a bit of the background of the Tppe program.
Okay, well, TUHF has been around for about 17 years. And over that 17 years, we've always been invested in making sure that we mentor and handhold our clients through the process of investing in property, specifically in the very difficult and challenging environment that the inner city is. We know that the inner city has its wicked problems, being crime and grime that is associated with. So it needs a landlord of a different type whose understanding of that market means that they are able to navigate the associated risks. So as TUHF, we've always been very clear that training and mentorship, particularly hand-holding on an individual basis, our clients, is key to what we provide. I think about 5 years ago, we then thought, you know, we've been providing training very informally over these, as I said, 17 years, but we thought we needed to then structure it into a program that we can take our clients through. It was fortunate at that time that we were able to be supported by the Jobs Fund, and they specifically, Jobs Fund of National Treasury, and they specifically wanted a program that was accredited by a recognized institution. So UCT, when we approached them, we approached a couple of universities, and I must say that both the Witwatersrand University, the University of Pretoria, were also keen to partner with us on this. But when UCT also expressed an interest, and Francois, I think at that time had just moved from VETS to UCT, and they were willing to accredit the program and also facilitate it and have this association, we then went with that option. It's been an interesting journey since, as Henry says, we've trained about 185 clients, in fact 175, because 10 of those guys who've participated in that program, like Leo here, are non-clients. So they've approached us and said, I'm willing to pay for it because I've had such good reviews about what the program can do. Most of the clients who've gone through it, I've spoken to them individually, have said, even though I haven't managed to grow my portfolio, some have, but the ones who haven't also say, I've been able to improve the way I operate and run the existing building that I have. And I now understand the concepts that are involved. I think more importantly, it's also the networking opportunity that they have peer-to-peer, so they can speak to another property entrepreneur who's going through the same things in the class. While they are going through formal content, they also during break can share experiences on the ground and learn from each other how to navigate the different program or challenges that they have. We then support the formal training with individual mentorship that Bold Moves provide, which is Henry's company. So the program, I think it's 6 sessions. Initially it was 6 sessions over 6 months, but now we have now compressed it to 6 sessions over 3 months, meaning you go through 2 sessions per month. And at the end of it, you get a certificate from the University of Cape Town. So that's
okay.
in a nutshell.
Brilliant, Lusanda. Thank you so much. And you're talking about, 185 students, but 10 of the students weren't actually clients of TUHF. Now, that's one of the questions I got through saying, do I have to be a client of TUHF to go through this program? And we're very fortunate, ladies and gents, to have a very good looking young gentleman called Leo all the way from Kempton Park. So Leo, I mean, you've just come through. Now, unlike you've got Francois and Henry, 20, 25 years of experience. You've been in the property market for about 3 years. So we want to hear, what were you doing before? Why did you get into property? And what's your experience been through the program?
All right, thank you very much, Andre. I think Lusanda has created a very good frame structure of exactly my example, how I came about. So I joined property business about 3 years ago, obviously because I just bought a property in Kempton Park near town, had a space to build a few rooms, became a mastandi in a way in Kempton Park. And ultimately grew my interest because there was some revenue generated out of that, which was a supplement to the bond. But ultimately pulled my interest and pulled my interest in getting and formalizing this because I could assess the opportunities. But there are a lot of anxieties that I had, Andrew, because of the fear of the unknown around the environment. And I thought, let me navigate and see. And one of those anxieties were caused by the fact that I didn't know how to access finance. I didn't have the technical know-how of how to grow my portfolio. I did not have property management tools. And it felt like a very lonely affair to me. So I didn't have peers that I could get myself into. So I read about the TUHF program because I was again surfing on the net, finding out which funding opportunities can I get, and I got to learn about TUHF and ultimately about the program. Now, before I started the program, I was just, like I said, a property investment cowboy that just wanted to get into that. But since then, I then got into the program, which really empowered me with two major things that I will never, nobody can ever take them away from me. The technical know-how of now, how do I start formalizing and financing my ambition and the vision that I have? And second of all, which investment tools do I use? And which strategies do I use to grow the portfolio? And mostly, what are the development processes that one needs to go through when you want to invest? Because I'll tell you, like any other property entrepreneur out there, you've got this big plan that you'd have a high-riser building, but it looks scary from far because you don't know how are you going to deal with tenants. And this program empowers you with that. But I think more importantly, from an emotional side now, I got to collaborate with experts that were already beneficiary of the TUHF program, that were already financed with TUHF, that brought me in and sort of give me a different view of how I was going to run my business. And an example now, Andrew, comes from how I evolved from just having one stand, to remodel a business which currently I run called the Cockpit Property Investments, which started and reinvented itself to a commercial unit, residential and property development specialist. And this started after the program because that's when I started reshaping myself and remodeling myself as a property entrepreneur. As I speak right now with you, I had colleagues that I had met that I'm managing at least not less than 68 of their own units. And this is through the confidence that I've built through the program. I myself am on the pipeline of applying for an inner city development property in Kempton Park that's on the pipeline. And I'm running a real estate agency, which I got accreditation through Estate Agents Affairs Board because of the
Congratulations, brother.
Thank you very much. So those are the quick wins that I can count right now, and I can take you through, Andrew.
No, brilliant. Thank you so much for your time, Leo. That's fantastic to see someone that you've come through, you've got the education. The big thing here is the support and the mentorship, right? To help you move forward, because property is not easy. Anyone that says property is easy is lying, right? Because if it was that easy, everyone would be doing it.
Very lonely can be. Very
Exactly, exactly. So what I want to do, Leo, I'm just going to pause you for a second. I just want to hit a few questions now, a few technical questions, and we'll come back to that. Okay, so that question I asked earlier, Henry or Francois or even Lusanda, the question around, I'm a tough client. I would like to continue to purchase more flats or buildings in the CBD. What are the risks, though, moving forward with the proposed changes of Section 25 of the Constitution of owning property in the CBD? Are there any comments on that? I'm not sure who wants to answer that.
Look, Andrew, let me give it a shot. I mean, look, Section 25 of the Constitution deals with housing, you know, and the rights of housing. And yes, look, there will be a demand, and we all have heard of the PI Act, and we've all heard some of the risks involved in properties. And yes, but what it does show, and I think municipalities are increasingly aware of, and that is there is only one way to handle the shortage in the housing market, and that is to produce more houses. You know, you've got to pump up the supply. You can do all you want. You can say all you want, but I can tell you, if you want to bring prices down, I mean, my first 2 minutes of my economics course at UCT is supply and demand. And maybe that's all you ever need to know in economics. But the issue is you've got to pump up the demand. So I am seeing across municipalities at the moment a push towards inclusionary housing. In other words, even people at the upper end of the market are being told, if you want to build that multi-million rand flat, you're going to deliver some lower end flats. And I think for those operating at the lower end of the market, that offers opportunities to start working with some other developers as well. So yes, I mean, there is always some risk, but I think that the land issue in South Africa and the housing issue to some degree is also a rural issue. A land issue is a housing issue at the end of the day. And I think that anybody who plays a role in that segment of the market will be supported. And you know what? There's one thing as an investor. Sometimes you've got to cut out the noise a bit. There's a lot of noise out there. There's a lot of talk out there. Some of it's factual, and I'll be honest, some of it is not factual. If you go down, it actually isn't so. But yes, again.
Exactly.
You have constraints. Look at those constraints, and I'm saying don't find a way around the constraint, but face the constraint and come up with something.
Exactly, and get the right education, understand what you're doing. And a little bit later, I'm going to come to Henry and ask him about that as well. But just, Francois?
Sorry, let me just then, if I may just say a few words about education and the TPE program from a University of Cape Town, if I may. First of all, as the University of Cape Town, we don't take it lightly when we enter into agreements with individuals or with companies. People come knocking on our door continuously. Oh, we've got a program, will you credit it? We've got very few that we actually are. So the relationship that we built with Lusanda, who really, I mean, this is her brainchild. I mean, it's Lusanda who brought it and who thought through this and brought it to the market. But my final point is this. Many people will argue, you can't teach entrepreneurship. Well, maybe so. We can't change your character necessarily, but we can teach you to be an entrepreneur in the property sector. In other words, entrepreneurship is linked to a sector. If you decide to be entrepreneurship in the hotel industry, there are courses for that. So you've got to build your expertise both as an entrepreneur, but you may have done other sectors as well. You may have been involved, but this is your opportunity to get to know how to make effective decisions in the property sector.
Exactly, 100%. And Francois, just for the audience to know that, moving forward, TUHF are going to have online property courses as well. So keep an eye out for that, all right? There will be future online property courses. Lusanda, coming straight to you for a few very quick updates. Shalom was asking a question, is it true that TUHF is not awarding finance due to COVID? If you want to quickly answer that one.
Yes, it's true. Obviously, like all businesses that are prudent in the way they, approach business in these times, we have taken a decision as management, supported by our board, that right now we need to focus on managing the assets that are already in our book, making sure that we support our existing clients to navigate this time and hold off on new credit until we are confident that the market has moved sufficiently to take on the risk. Yes, the interest rates have gone down, but there are other factors that one has to consider in the market. Mainly the fact that, capital markets, the providers of funding to people like ourselves, are also cautious in this time. So for us to be able to extend credit to new projects and new clients and in new areas, we have to be able to raise such funding from capital markets who are feeling sufficiently confident that we have, addressed some of the concerns that COVID has brought on. We are starting to see, as I said earlier, that there's been improvement in collection levels. The discussions around when we would then lift the suspension of credit is on the table. That should happen, in the next month or so, and we'll communicate to the market once that is formalized. But we continue to service, as I say, our existing clients. We continue to service our existing commitments, and we continue to have conversations with clients that have seen opportunities, and we are assessing those in the background and trying to stress test and see if the fundamentals still hold. So, I think that's the kind of short of that question. But we are certainly still committed to the markets that we operate in, and we would resume credit as soon as the time allows. I wanted to add to the comment that Henry made earlier, or rather Francois made earlier, around the only way to respond to demand is to obviously produce more housing. Our take on that is that you need to do that, but we need to avoid this tendency in South Africa that government then provides mega projects with 1,000 units in one development and not recognize that you have to do that together with small scale developers in the market who will then bring the necessary competition and the necessary standards in providing quality affordable housing. So we're saying that our government, private sector, all the players in this market need to recognize that housing has to be done in an incremental way, and we have to recognize the role that providers like Leo, who just said to us now that he started as an Umastandi with 2 units at the back, that small contribution that he makes provides the necessary competition and the necessary quality in service that Francois spoke about before, that experience that then enriches the life of someone who lives in a rental unit.
And so I think that's important, if I just interrupt you there, Lusanda, because there's a question on that, that's why I'm interrupting you there. Is that someone saying, what makes your Umastandi different to your normal back room? Because lots of people go, for example, and they just build back rooms, right? How is Umastandi unique? Surely there's some tick boxes people have to tick. Why is it different to your normal back room style?
Well, firstly, we make sure that when I said Umastandi earlier, I meant Umastandi as in literally the stand owner. So it doesn't have to be Umastandi, the product in the township. It's Umastandi, which is Leo in the CBD of Kempton Park or in the CBD of Johannesburg, where TUHF normally finances. So what distinguishes Umastandi, the product in townships, is that we are insistent that those units are approved by the city or the council or the municipality where that development is, that the necessary quality checks are in place, and that the unit is developed to standards that provides the necessary comforts and dignity to the person who's going to use it. The issue of ablutions is something that's taken so much for granted in townships. Someone renting a backyard shack and using a Vascom and sharing a toilet with the with the owner in the main house. We are now saying you need to bring those facilities into the units in the back so that people have the dignity to be able to take a shower in the morning, use a toilet in a way that provides, as I say, that necessary dignity. So it's quality structures that are approved by the city. We use professionals that make sure that the construction quality stands the test of time. Structural engineers check that the structure itself is stable, for instance, and that the services provided are of quality. The most important thing that we're starting to push in Umastandi is that, you know, the tendency not to pay for utilities in townships needs to stop at some point if this economy is to move forward. We are insistent that the clients who come to us for finance Umastandi must correct their accounts with the city. They must start servicing their rates and taxes. They must start paying for their utilities. And we are starting to see that people are making those arrangements, and we're starting to correct that. We are then saying to government, we are putting directly income into your pockets. We are contributing to the fiscus because we are making sure that the developers in townships also start paying for the services that they get. In return, what we want is that the government simply needs to do its work. You know, sometimes you don't need government to give you anything. You just simply need them to come and pick up rubbish on a Thursday, if that's when Pick It Up should do it. You want them to approve plans in good time if that's what, you know, you are dealing with them for at that particular time. All we're saying is that I think that private sector can do these things quite effectively if government just did the basics and got out of the way. You know, they just need to move out of the way and do the basics.
100%. Thank you so much, Lusanda. Okay, I'm going to quickly come to Henry, and I'll come to, well, Francois, is it very quick? Have you got a very quick comment on that?
It's very quick, but the one point I've been making over the years is that we've got to move away from the 40 square meter house, 40 kilometers from where you live, from where you work, where you spend 40% of your income on transport. That's not sustainable. And the only way to do that is probably going to be, the answer is going to be in the 20s. 20 square meters, 20 kilometers from where you live, where you spend 20% of your income on transport. And that, I think, is going to offer us opportunities to go with units that are closer to people's home, people's places of work. And we can't carry on with the way we've been doing.
I agree 100%, Francois. Thank you very much for that. Now, ladies and gents, you're probably wondering, how do I find out more about these future online property courses? How do I get in touch with TUHF? Please write this email address down. I'll ask my team to pop it into that chat box for you. It's marketing@tuff.co.za. Write that down, marketing@tuff.co.za. We'll put it in the chat box for you if you want to find out more about the future online property courses. Now, Henry, we've got 2 or 3 minutes left. Could you purely touch on the TPPE program? What are some of the big highlights you've had, and maybe just talk more about the importance of that program?
Andrew, I'm so passionate about TPPE. It was started in 2015, like what you have said. 185 participants have gone through that program. But what excites me more is when I see the participants working on a project where they've got to basically take the knowledge that they've gained in class and use it on a practical project that we often give them. And it's so exciting to see people who have never done a presentation coming in front of Professor Viruly, Lusanda, and myself, and presenting something that is almost presented at Francois' master's program. And that's actually amazing. And we have seen these entrepreneurs growing. And we have seen that some of them, they have actually taken what they've learned and implemented it, and coming with what I call gesh housing. That's good, average, small homes. And these gesh homes, you are finding them in the township. And Umastandi is basically transforming the landscape of property in the township. And I think the government should actually be making some contribution towards what TUHF and Umastandi are doing to try to improve the living condition, giving giving people a place that they call home. So this is an exciting program, and we look forward to continuing with some of these topics that we're going to be covering. We're going to be looking at the interest rate environment. We're going to be looking at town planning, and we're also going to be looking at property law in some of the webinars that we're going to be doing. So you are invited, and come and join us.
Absolutely. Thank you so much, Henry. So ladies and gents, you're probably, and I can see all these comments and all these questions going, but how do I get involved? It's very simple. If you want to get hold of any one of the experts or Leo, just email marketing@tppe.co.za, and TUHF will connect you, and all your questions will be answered through there. On behalf of the SA Property Investors Network and TUHF, would like to thank you for your time. And remember, ladies and gents, stay positive, stay humble. Make sure you do connect with TUHF and you get the right support and education. It is 12 o'clock. When you're having fun, time flies. As you can see, it is 12. So Francois, thank you very much, Henry, Lusanda, and Leo. Thank you for your time. Ladies and gents, it's been awesome. I'm sure you're waiting for the next property course to come up and webinar. Just stay connected. Ladies and gents, have an awesome day today, a positive week, and go out there and build wealth through property. Thank you very much.
Thank you, Andrew. Thanks.
Thank you all.
Thank
Thank
you very much.
Thank you.
Can I ask, are we still live or not?
We are still live, Francois, so.
Yeah, we'll just give it a second, and Nico will sort that out for us.